One of America's top 20 banks failed last weekend, plummeting the rest of the country into what feels like chaos. Silicon Valley Bank in the Bay Area is no more, but questions are swarming around what might happen next and if this could affect local banks here in Louisiana. A finance professor at Tulane University says, don't panic.
And Friday marks the end of a rough week for the banking industry.
Last weekend, the Silicon Valley Bank entered crisis mode.
Increasing fallout following the historic collapse of Silicon Valley Bank.
Concerns growing over the stability of what was a tech-focused lender in the valley.
It's the 16th largest bank in the U.S., and publications threw around words like bank collapse, bank failure, and loss. Words we haven't heard much of since the recession in 2008. But what do these words really mean? What actually happened?
What happened with Silicon Valley is Silicon Valley took deposits from a large group of depositors in, as you may have guessed, Silicon Valley. And during the pandemic, these startups and these businesses had a lot of cash, as you may have imagined. Now, as the money started drying up, these businesses needed to draw down on this cash. They needed to draw down on these deposits that were being held at the bank.
A typical bank will take deposits and pay the depositor an interest rate and use that money to loan out. The Silicon Valley Bank did that, but they also took deposit money and bought long-dated treasuries, which is a fancy phrase that basically means the bank loaned money to the federal government for a certain amount of time. They also bought mortgage-backed securities.
Treasury securities, very, very safe. This is a very low credit risk product. So there's not a lot of risk of the Treasury defaulting. However, with inflationary pressures, the Federal Reserve started raising interest rates, and this has an opposing effect on bond prices. So the price of the these Treasury securities started going down.
The bank then started to sell those securities at a loss, a $1.8 billion loss. And that's where things start to go downhill. Some venture capital companies got wind of the security sales and advised its clients to pull their money out of the bank, triggering what's called a bank run.
The bank was actually shut down to prevent this run from getting even worse than it already was on Friday during business hours.
So how does this affect us in Louisiana? In short, it doesn't. Not really. Let me explain. The Federal Deposit Insurance Corporation insures deposits up to $250,000 now, which means that your money is safe if a bank goes under, as long as your bank holdings don't exceed that $250,000 figure. Most local banks in Louisiana don't service depositors with holdings above that number, so a bank run would be unlikely and also very unnecessary. The FDIC would give you your money back.
The fact that Silicon Valley had so many uninsured depositors compared to insured depositors is something that was very unique to this bank.
For perspective, more than 80% of SVB's depositors were uninsured. Most were tech startups and giants in the industry, so it makes sense. But the national average for that type of depositor is about 40%. It's likely the rest of the country is safe too. Some are afraid that this bank run could trigger another recession like what we saw in 2008 when the Washington Mutual Bank failed. But that's not likely either. That recession revolved around the housing market crash, which is not the case with SVB.
Banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills.
In a press conference Monday, President Joe Biden said, number one, all depositors in the bank will have access to their money immediately without the burden being placed on taxpayers. Number two, the FDIC seized the bank and the managers of the bank were all fired. Number three, investors in the bank won't be reimbursed. Number four, his administration would look into the root cause. And lastly, that he'd also look into reducing the risk of this ever happening again. As for the Silicon Valley Bank, it was put up for auction.
The whole process has to resolve within 90 days. And the way a typical bank failure works is that there is an auction, and there is a winner of this auction, and that auction winner acquires the failed bank.
And to the average person, this shift usually goes unnoticed. So long story short, SVB did fail, but Louisiana depositors shouldn't worry. Your money is safe.